5 to 10 years, there will be a lot of competition. I think the lines will get blurred between what's crypto-focused PE and just PE. Can Bitcoin be a payment tool? Then in 2017, 18, 19, that time frame, we had smart contracts, right? We had the white paper, essentially scams, where people were raising money to launch stuff that never got launched.
Coinbase's business model is not doing great either. Their stock's not doing great. Kraken's IPO keeps getting delayed. There's not a bunch of Web2 AI companies that raised $50 billion.
You've reached Toby and Brent. We'll get back to you.
Another beautiful day in Miami, now with a special guest that has done a lot of awesome stuff. And, there's a lot of things I want to get to in terms of the new fund and a lot of awesome amazing things. But first, let me just start giving a quick introduction. Akshat, where you're based, the company you're with, just give the people a little bit of an idea of who you are.
Sure. My name is Akshat. I am one of the co-founders of Maelstrom alongside Arthur Hayes. Maelstrom is effectively his family office. It's a single LP setup. And basically the mandate is to turn money into more money via crypto.
I love that mandate.
Simple as that. And I do it at home.
No, I want to, because, I used to work for SOSV, right? So they were obviously very early in BitMEX, which is kind of still the number one type of thing.
Yeah.
And now you met Arthur at BitMEX, because you worked at BitMEX too, right?
Yeah, so I guess some background might be helpful. So I graduated from undergrad in 2013 from the same school as Arthur, but we didn't know each other. We were quite a few years apart. And from 2013 to 2019, I was kind of getting on board as a retail user of crypto products, but not full-time professionally. And then in 2019, I joined BitMEX. And in the interview process, that's basically when I met Arthur.
Okay. Were you always a trader? Was that something you always wanted to do?
I was never a trader. I was always, so I started my career in consulting. So I was basically kind of like a data analyst sort of person, masquerading as a advisor to companies. But basically I was taking data sets and just pouring through Excel spreadsheets, putting them in Access and figuring out ways to derive insights for large companies. Some of those companies are pretty sizable, Fortune 50 type companies. Did that for 2-3 years, and then as part of that work, I started working on M&A projects that were related to those engagements. And
like investment banking type style?
Yeah, for example, if Coca-Cola wants to divest of a company, then we would help them, advise them on that process. Or if there was one project we worked on where a large Canadian manufacturing company wanted to acquire a competitor in France. So we helped them do the commercial due diligence, then passing all the finance to finance guys. Did that for a while, and then found my way because of that work, the M&A work I did in the private equity space. Mm-hmm. So I was kind of like a long-term illiquid private investor.
Yeah.
That was I was in the wild west of private equity. It was the lower middle market. So you can imagine just small random companies all over the US that honestly not too dissimilar to crypto companies in many ways, but not trading. So I never did any short-term trading. I never took kind of like a short-term horizon on any investments I ever made, including Bitcoin when I bought it back in 2013. I'm still holding the same coins that I had back then.
Never left.
Yeah, so I've always kind of been a long-term investor, and that's why we set up Maelstrom as a venture shop, right, and not a hedge fund.
But I think, because my background is very similar. I did, PE in Germany at a company called Goetz Partners. It was also I don't know, 30 to maybe $80 million deals,
Okay.
the SMEs type things.
Got it.
And we did a lot. We were a team of 30 people, which was cranking the word out like no tomorrow. Right? 100-hour weeks, all these different things. And then for me, the process was I went to China for 3 years, and that's how I got into crypto.
Okay.
Did you get into crypto when you were still in the US, or was that the time when you were already in Hong Kong?
Yeah, so I started, I was in the US when I applied, but the first job I got in crypto was at BitMEX. And it was, I remember it was on LinkedIn. It was 2018, 2019. It was a LinkedIn job posting, and it said, BitMEX Ventures, hiring for someone of so-and-so background. And it specifically said, you must be a resident of Hong Kong or already have a work permit in Hong Kong in order to apply. And I didn't have any of that. I didn't live in Hong Kong.
So you just applied anyway.
Just applied anyway. I thought, like, this is the job I want, and
Why not?
don't really care. And I didn't hear back for months. And then at some point, one of the recruiters reached out to me and said, hey, we've been looking. We've looked through 500 plus resumes, and we're going to give people outside of Hong Kong a shot. And you were one of the few who tried outside of Hong Kong. So I got into into the interview process, met other folks on the team, and then the final round was with Arthur. And if you recall, in 2019, what Arthur was relative to this industry, BitMEX was the largest exchange in the world at that time. Arthur was kind of like one of the top 10 main characters, I'd say. Now he's maybe like a top 50, but at that time it was the real deal talking to him. And that was my first time meeting him.
How was it meeting him at that time? It was, because you might have had an expectation, right? It's like, I'm talking to this guy, and it's like...
Yeah, it was online. I remember it was morning in Hong Kong, it was evening in Chicago, which is where I was living at the time. And I was kind of like nervous. I was like probably like 25 or something like that when I did that process. And I took one shot of Jack Daniels prior to the interview. And it was in the office. I remember it was at the PE fund I was at. Everyone else was gone. And I was just there maybe 9, 10 p.m., something like that, Central Time. And came into the interview, and he was very Arthur, just like larger than life personality, really detailed questions, didn't let me bullshit anything, and called me out when it sounded like I was veering in the world of, kind of like some of the Americanisms, that's the bullshit we say all the time, and really appreciated it when I gave very candid thoughts on what they should be doing. So, went well, and then I got the job.
Then moved to Hong Kong.
Then I moved to Hong Kong in September 2019.
Was that your first time in Asia at this time?
I traveled in Asia a bit. I did like a 3-month Chinese language program in Beijing back in 2010.
You still kept some of that language or not?
Yeah, you can't use it in Hong Kong, right? It's a Cantonese speaking place.
Fair.
They don't like it if you speak it unless you're Taiwanese, then they're fine with it. But I kind of speak a little bit now when I go to China. Sometimes I'm able to use it, but
nice.
It's all rusty.
Very good. So moved to Hong Kong, joined BitMEX at that time. And I think we all know what BitMEX is. We don't need to go into too much detail on BitMEX in itself, but Maelstrom I'm quite interested because it's structured as a family office. But I think now you're open to, for the first time, sort of taking on outside capital with the new fund that you're raising.
Yeah. So I guess kind of the history is that BitMEX Ventures was the fund that I joined in 2019. From 2019 to 2022, we went through the full life cycle of that fund. So me and 2 other colleagues of mine, and the fund did quite well. At that time, we took basically minority positions in CeFi, which was, if you recall at that time, CeFi was the name of the game. There really wasn't much DeFi at that time. We were the first first 1 or 2 checks into a number of unicorns or near unicorns, and we were able to get liquidity on a lot of those positions, in part.
You guys said equity or token or both?
They, back then, people didn't really do token deals, and that whole concept of equity with token warrants wasn't a thing back then. So this was we amassed most of those positions in 2018, 2019, 2020, and then stopped investing in basically 2020. And part of that was because of some regulatory stuff that happened with BitMEX.
Yeah.
And one of the byproducts of that regulatory matter was positive, that a lot of companies that we had invested in said, we want you off the cap table for reputation reasons. And we were like, okay, and started to exit the portfolio with their blessing, which we wouldn't have been able to do without, right? And we got the blessing of all the other co-investors. Nobody wanted to drag, right? No one wanted to pull out with us because they were like, okay, we're getting rid of the toxic part of the cap table. Little did they know that all those companies would eventually go to shit, right?
Yeah.
A couple of years later. So we were actually super fucking lucky.
Wow.
We exited at the peak, most of the portfolio in 2021. Some of those companies don't exist. Some of the founders are either on their way to jail or should be in jail or are already in jail. And there was stuff like, and some of them were good companies too. That were great. Like Tap Trader is a good example, right?
Yeah.
And then we basically were forced to sell at the top. At the time, we were a little bit frustrated because we thought, might still might go higher. But then by 2022, 2023, it was validated. Okay, it was validated that we were fucking lucky, basically.
Yeah, you're like, we did everything right.
yeah, we're geniuses. Pretty much.
This is all part of the master plan.
Exactly. And so then, this, what was initially just like kind of a venture shop and a crypto exchange turned into this large portfolio of companies and holdings and just money, right? And then we grew the pie. And then in 2022, 2023, two of my colleagues spun off and started another fund of their own. And I stayed on board with Arthur to help him figure out what the next stage of BitMEX Ventures looks like. And we formulated Maelstrom. That was in basically the wreckage of FTX.
What's up with the name? What is Maelstrom?
This is it's an Arthurism. He's a big fan of Dune, and from what I understand, I've never read the Dune novels. From what I understand, this is like a recurring theme.
Okay.
It's like a storm, like disruption, entropy kind of concept.
Oh, yeah, that's pretty cool though. I like it.
Yeah, so we had a name before we had a real coherent thesis, I'd say.
So it's interesting that you brought up that you said that token deals weren't like a big thing, or equity with like token warrants wasn't like a big thing, because you came from like the real world of like companies with EBITDA and business models, and similar to when I got to venture, because I worked on angel lists with some of the biggest syndicates and like the aerospace, biotech space. When I came to crypto venture at our prior venture fund, I met a lot of startups, and I was like, okay, what's your business model? What's your go-to-market strategy? And they're like, oh, we're just gonna launch a token. And I was like, whoa, this is a totally different, type of industry than now, to where we fast forward to 2026, where now say token market is like not done well. And I think like the equity model is obviously coming back, and a lot more startups are now kind of building with more of a Web 2 mindset. But with your guys' newer fund, I know it's more on the PE side of things, right? Versus like straight like venture, which I think is very opportune timing with a lot of companies that maybe have already gotten big at the Series A, Series B like stage. Maybe they can't go like public, and so I think it creates a unique window, which maybe you can share more about.
Yeah, for sure. Yeah, so we have Maelstrom, the family office, which is the venture shop and a little bit of liquid. And now separately, we're building Maelstrom Equity, which is the PE fund that you're referring to. Thesis behind the PE fund is kind of what you said, right? It's that there are a lot of these medium-sized businesses that are similar to what you and I looked at in our PE days, right? In crypto, that have been around a while, still founder-led, and some of these businesses are like 5-7 years old, have demonstrated that they can generate cash flows in a recurring manner over a long period of time. But, they're kind of like, for some reason or the other, they're sort of diamonds in the rough and they need some polishing. Often it's that, in outside of crypto, usually companies that are founder led and, last 5-7 years, eventually they bring in a growth equity partner, they bring in new management, there's some kind of professionalization that occurs. Right now in crypto, we're kind of stuck because those processes don't exist yet.
Yeah.
So our thesis here is find 4 to 6 companies like that, acquire majority stakes in those, run those companies, and then basically execute a PE-style playbook to improve the quality of these businesses, improve the quality of revenues, beef up management, improve processes, grow the businesses, and then sell them in 5-7 years.
What's the sweet spot for a company like this? Is it very similar to the type PE model? It's like cash flow positive.
Yeah.
Are you gonna buy it on like a lot of leverage, or it's just pure? You use the money from the fund.
So these are businesses that are profitable. Well, some of them are like shockingly profitable, and like we're talking EBITDA margins in excess of 75%.
Jesus.
It's insane. And right, we're only doing 4 to 6, so it's a small space, but we're taking a very small chunk of those. And the reason we can do that is because there's no competition right now. In 5 to 10 years, there will be a lot of competition. I think the lines will get blurred between what's crypto-focused PE and just PE. In 5-10 years, so a lot of the PE funds outside of the space will start to look inwards to our industry. But these are all profitable businesses. They are Geographically, all over the place. Often they have like a U.S. domicile, but a lot of the operations are abroad. These are businesses that are picks and shovels. So, like they're business services, tech-enabled services businesses. They're like data and analytics, they're stablecoin infrastructure, stuff like that.
Yeah.
And we've spent the last basically year building out that pipeline, and now we're fundraising.
So you already identified some of the potential targets.
Yeah.
And now it's kind of like, okay, what's the size that you're trying to raise? 200, right?
So the fund is structured. We have an anchor fund that's $250 million. And let's say we do, we're doing 46 companies. So let's say we do 5 companies. That's $50 million from the anchor fund per deal. But the deals could be much larger. So in the case that, let's say we do like a $300 million deal, we'll take 50 from the anchor fund. Then at the time of, we'll raise the remaining 250 for that deal. It's like a deal-specific fundraise, SPV style.
But would you do that with still using debt in order to sort of improve the margins
There
of
will-
your equity as well?
Yeah, so a lot of this value creation is basically going to be through operational improvements. That's like the vast majority of it. Debt is a component, but it's not the primary driver of returns.
So it's not going to be like a leverage buyout sort of.
They will likely, the buyouts will likely use some leverage, but that's not going to be a core component to why the story works. It'll be kind of like just additional juice that we squeeze. But what's more likely is that we wouldn't do a leverage buyout right out the gates. We would wait until we stabilize revenues, because some of these businesses are quite cyclical.
Yeah.
Wait till we improve the quality of the revenues so they're less cyclical, and then later do a recap, bring in debt, and then recap some of the equity. So.
And then what's the plan with like the management team? Like, or is it like you're as leadership? Do you have like a roster of like CEOs you're gonna install? Like, what's the?
Yeah. So basically that. So our team is myself, Adam Schlegel, who we're poaching from TradFi. He was at a spin-off fund of Vesta Equity Partners in Austin for a while. Been doing PE for 6-7 years, SaaS PE, and then Arthur, right? So each of us has different skill sets. I'm kind of like the crypto guy. Arthur is the operator, and Adam is the PE guy, the deal guy. So if you look at Arthur's, what he brings to the table, right? He himself is a founder. He's run a business, a profitable unicorn, right? One of the few unicorns that was profitable in like its first early years, and he's an OG in the space, so he's got one of the deepest benches of potential, like you said, C-suite, CSOs, CEOs, CPOs, etc., to call upon when we acquire these companies. And we've already kind of lined up those folks. They're ready to be deployed as soon as we acquire companies. And so they'll be on the governance standpoint, Arthur will be on the board of all these companies.
Gotcha. And why do you feel like right now is the best time?
I think, like you said earlier, our industry is maturing to a phase where, if you look at the first cycle I was in was 2013, back when we were just proving out, can Bitcoin be like a payment tool, right? And that was kind of validated. Okay, it works theoretically if you want to use it as such. Now that's evolved into store of value. It's kind of a different thesis. Then in 2017, 18, 19, that time frame, we had smart contracts, right? And we had the white paper, essentially scams, where people were raising money to launch stuff that never got launched. And then you have DeFi summer in 2020, right? You just kind of keep evolving, and this industry just keeps getting more and more mature. This last cycle was a little bit more about the maturation of DeFi products. Athena was one of the marquee deals that we co-led alongside Dragonfly, and Arthur obviously wrote the business plan for Athena, conceptualized the business. And now at this phase, given what's happening with the entrance of TradFi into our space like never before, there's a lot going on the public side of things. So there's we had DAT Summer last year, which we'll see how that plays out. But we had it. We had the
Interesting.
Yeah, right. The crypto ETFs. There's a lot happening on the public side of things, but the private market is still quite immature.
Yeah.
And we feel like that liquidity is going to start working its way towards the private markets.
And I wanted to kind of touch on you a little bit. The projects that you identified that end up going to be basically getting acquired for the most part. Was it a problem that they said, I don't want to do that? Like, I don't want you to run my company and own a majority of it? Or they said, oh, like, take me out. I'm done. I'm happy.
To be honest, most of these founders who are running these businesses are kind of tired. Even the ones that have fundraised a lot and on paper, things look great from the outside, right? It's like you look at their most recent round, their Series B, C, they keep raising higher valuations. They don't really know where to go because in the case of those types of the companies that kept raising money for no reason, now they're kind of fucked because they can't raise again because it's going to be a down round, right? It'll piss off all the shareholders. And the businesses were overvalued at that time.
Yeah.
So they're looking for escape hatches if they took that route. And then the ones who didn't over fundraise, they've been running these things for 5-7 years. Now they started these businesses when they were like 25. Now they've got kids. They want to have a life. They want to maybe they're serial entrepreneur types. And they want to start new businesses. They just want to be stuck with this stale thing forever. And there's no passive liquidity at the moment for founders. So far, basically all you can do is sell to Coinbase, to Binance, to maybe Robinhood. And usually when those deals are transacted, on paper you'll hear like so-and-so sells for $300 million, let's say, but it's like, 10 to 30% cash. Some of that's deferred and then the rest is all stock, tokens.
And you still have to most likely stick on with that new company that acquires you.
Exactly. Now you have a boss, and he's got a boss, and all of a sudden you just got a job, right? It's like a highly paid job, but it's a job.
Yeah.
And that's not what they signed up for. And
I mean, it was interesting you bring that up because coming from like the Web2 side, it's like there's not great liquidity options for founders like in our industry unless you're building an equity business, which again is like a 10-year time horizon usually. And then if you're not launching a like token, you're saying you get to that point, you're raising Series B, maybe you're not a US company, or maybe like you can't do an IPO because it also costs a lot of money and maybe you don't have like the numbers to hit like an IPO. And so it's like it really is like a big challenge in the like space. So it's very like innovative that you guys are being one of the first kind of like crypto focused like PE funds.
So now I could ask, if you're not buying all these companies, who's going to buy them? Right?
When it's time for us to exit?
Yeah.
Well, so right now we're able to buy cheap because no one's in the space, no one's doing it yet. And we can buy a lot cheaper, but because our deals are way more cash heavy, it's still more attractive to the founders than selling to, their business in exchange for like a 6-year job at finance. So we're able to buy these a lot cheaper than some of these headline prices that you've seen in the past couple of years in terms of crypto M&A. And then when it comes time for us to exit, a couple things are going to happen, right? So a cycle or two will have passed by then. Every cycle, there's like brand new names coming into the space, right? There's completely unexpected buyers and liquidity coming into the space, both strategics as well as financial sponsors of deals. That will happen. That kind of is like macro tailwind will happen. Alongside that, we'll be improving these businesses so they're actually acquirable, right? So right now we look at these businesses and they're like, they don't have salespeople or, it's like the CEO is really just like a chief developer and none of that looks attractive to a potential acquirer. But after 3 to 5, 6 years of us turning these businesses around and maturing them and basically doing what Adam did at the fund he was at before and what I did prior to crypto, the same exact playbook, these businesses will look a lot more attractive and the world of buyers will, even assuming those tailwinds I mentioned earlier don't happen, the world of buyers expands dramatically by sheer virtue of the businesses being way better than that.
I think it's interesting because like if these actual like Web2 PE funds come in and they're eventually going to look for Web3 companies, then they're going to probably like they could be buyers at the same time, right? Because at the end of the day, it's like this deal might not be as attractive for a Web2 PE fund that has certain metrics, but like in 3 to 5 years from now, if you turn it around,
right?
And they're used to price tags that make sense, right? Like.
Yeah, and part of the reason also that these strategics right now are acquiring these businesses the way that they do is because they're not great businesses, right? So they're negotiating accordingly.
Yeah.
They're just reducing risk for themselves. They're saying, well, look, we're going to tie these guys to like our performance rather than acquire these businesses for cash. But when we come in and de-risk the acquisition for them, then we'll be able to command a higher price that's more cash heavy as well.
Yeah, it's interesting because for us running a fund, we were at a prior fund together. That's how Toby and I met. Then starting our own fund, and when we look at deals, and I always ask founders that question, like, how are you going to exit? What is your plan? Oh, Coinbase is going to buy us or Binance. I'm like, well, I mean,
they're buying a lot of companies.
Yeah, I also won't say names, but like a big trading firm that's very close to like Coinbase is like, Coinbase's business model is not doing great either. Their stock's not doing great. Kraken's IPO keeps getting delayed. Like, there's not like a bunch of Web2 AI companies that raise $50 billion are like, sure, we can just throw $1 billion here, $1 billion there in like cash. Like, really, like, I don't think a lot of founders really.
Even if you could, you wouldn't do it in this market.
Right.
Yeah.
Unless
it's like actually worth it.
Yeah, I agree. Totally agree.
Yeah. So I think, and that's why I think now's a good time as an earlier stage fund to invest because the market is not very, very good. And like tokens, like alt season, obviously isn't like coming back probably anytime soon. And so you need to have like real revenues, which I think is like a good thing for the industry, overall.
Yeah,
very interesting business model. Innovative, new way of approaching this market, which we need. But before we wrap up, because we're almost at the end, just maybe a couple words on Maelstrom. I mean, the fund is coming up, sort of in fundraising mode.
Yeah.
And anything else that we should know about what's happening?
I mean, yeah, it's our first time taking outside capital. First time Arthur's ever allowed folks to invest in stuff that he does. So it's kind of it's a marquee moment for us. But I think that's Maelstrom equity, and Maelstrom, the family office, has the same mandate as before, focused on super early stage, DeFi heavy protocols that are building new stuff. So that hasn't changed. I think that we remain optimistic, just as we were before. This downturn didn't scare us at all, especially relative to the past ones. I'm sure you feel similarly.
Mm-hmm.
This is nothing. This was not a downturn. If this was a bear market, then they're good times are ahead. If you're calling this a bear market. Right.
If you could like to ask, that's the question of like, what is one prediction you have for the year? What's like kind of a contrarian take?
Contrarian take, yeah. I think everyone has the same take right now.
Yeah.
As of this week, right? All of a sudden, our sentiment just got better for some reason. But so what contrarian take? I think DeepIn will probably have its moment later this year.
I very much agree with this. Because it's actually an interesting thing that's happened and it just disappeared.
Yeah.
But the companies are still doing interesting stuff. And like the idea behind DeepIn is actually has value.
Yes.
You know what I mean? So I fully disagree with the statement DeepIn is dead. Yeah, it might be dead in the headlines, but that is something that is.
Yeah, it's like DeepIn in its current form isn't mature enough. Maybe that's like the more nuanced way of saying that. But
and if this is dead, doesn't come back.
There's no way.
Absolutely not.
Yeah, I think DeepIn's going to be bigger than DeFi someday. Let me rephrase that. DeepIn in 10 years will be
I was
bigger,
like, that's a very
bigger than DeFi today.
Yeah.
There we go.
Yeah. Amazing.
Yes.
Awesome. Akshat, well, it's very nice to have you on the pod, man. We're in beautiful Miami, so we have the big event tonight, and we'll definitely be seeing you in Hong Kong when we come sometime this summer and definitely in the fall, and we'll get back to you.